Let's welcome Nick Twidale from FP Markets. He's standing by in our Sydney studio to go through some of the charts that are catching his eye at the moment. Nick, welcome back. It's great to go and see you there. Let's talk the Aussie dollar because it's up and about now, and a lot of people are suddenly feeling a little bit optimistic.
Yeah, thanks very much, mate. It is. It's looking a hell of a lot better than it was a couple of weeks ago when it really did seem like it was going to slip through 60 cents. But as you've just said before, we've had a couple of like big central banks really smacking the currency markets, and that has hit the dollar. I think personally there's not really any massive change to the fundamentals that we've seen for the last few months. So I think we're probably going to see the dollar recover somewhat, but we're certainly seeing a lot more volatility. And with regard to the Aussie, I mean, that's a really good run back up off those sub 62 levels. And as you can see from that chart that we've got up there, I think we're sort of heading into a little bit of a sell zone near 66 cents. But with the volatility we're getting from the central banks coming through, and from a little bit of a change in the, I suppose, the sentiment towards the US dollar, Aussie's really reacted nicely, and we're back around 65 cents.
I'll be getting a little bit more excited if it wasn't during a blackout period. Of course, the Federal Reserve is up next week, so we don't hear anything from them for the time being, which coincides with this resurgence we're seeing in other currencies against it. That's the daily chart there. Probably tells a more broader story. The Aussie's been stuck in a pretty firm downtrend for a while. You said it doesn't really go and change the fundamentals, the fact that we have the BOJ and we also have the PBOC intervening in the markets at a short-term basis. Where do we go from here, Nick? Because it looks like we're going to go and come up to some kind of pivot point in the near future.
I think so, and I think you've hit the nail on the head. We're once again, especially in all the majors, we're looking to see where the Fed goes. Now, as we're saying, the market is sort of calling for a slightly less hawkish Fed. If we don't get that, and we've had that speculation for the last few Fed meetings as well, and we haven't got it from them, it does feel a bit more 50-50 now, but if we don't get a less hawkish Fed, I think we're back into the trends that we've seen recently, which will be down for the Aussie dollar, back up for dollar yen. And I think for something like dollar yen and probably for the yuan, we're going to see more volatility, because then you are actually seeing the Fed go head to head with the PBOC and with the BOJ in currency terms. So I think we've got some interesting times ahead as we move into those Christmas markets in just a couple of months, really.
Absolutely. Let's go and have a quick look at the Japanese yen. We saw that testing in 150 against the greenback. Yeah, it's levels a long time coming. You have to go back decades to see those kind of areas. Whereabouts now? You can see it's a pretty key moment coming up. You'd imagine looking at that chart. Yeah,
I mean, that chart's amazing. I think that's one of the reasons we threw it in. That move when they came in, being far too old and having experienced BOJ intervention on a number of occasions, that's a really strong move. That 152 down to sort of 146 is a huge move, and they're clearly still around as well. I think there was some sort of, let's call it scuttlebutt in the market, that they're sitting around 149 at the moment, and that could be why you're seeing us back around 146. But we are starting to see, we're at what feels like some pivotal levels at the moment. You can see where they've based sort of around about 145. If we go down sub there, I think to see concerted moves and to change the uptrend that we've seen for a while, we're going to need that. We're going to need the Fed reinforcement. But it could open a way for a very easy trade back down if we see a far less hawkish Fed. If we don't see that, then I think you're going to start to see the market going against the BOJ, and traditionally the central bank will lose because the market's always going to be that little bit bigger. But they are certainly smoothing these moves, and I think we're going to see more volatility, not just across dollar yen, but across the rest of the majors.
Yeah, absolutely. One thing's certain, though, I doubt the Bank of Japan's going to sound any more hawkish than what they've heard recently. I think they've been hawkish, about probably 30 or 40 years. Exactly. So undoubtedly that's going to go change on Friday this week when it goes and holds its latest policy meeting. Let's go finish off with the piece de resistance, the absolute gem of G10 over the past couple of weeks. The British pound, I think the last time we were on the program, it was getting absolutely shellacked, hitting record lows versus the greenback. But then Rishi Sunak's in the house now, safe pair of hands, soothing that concern, and the pound is up and about.
Yeah, it's flying very nice. I mean, look at that 116. Is it? Yeah, how wrong can you get it? I think, we were all down sub 104 on those moves. It's like, oh, we're going to see parity for the first time ever. Not true, not so much at all. And then back up to 116.50, and I think everyone's feeling a little bit more comfortable. Rishi's in number 10, and I think that has, obviously from a market's perspective, given that sort of nice improved sentiment across the board, and that's reflected really well in the currency. Where we go from here, I'm not too sure. As I threw this chart in as well because we're clearly coming up to a bit of a level. So once again, I think we look back at the Fed for the dollar side of this trade. We've got a little bit of comfort on the sterling side of the cable. Now let's see what we get from the Fed. Those guys thinking the Fed's going to carry on, and I tend to lean this way, that the Fed's going to carry on and deal with inflation first and then recessionary threats second. I think you're finding yourself in a good level to sell. I think those guys that think we're out of the mire here and you know, we're going to see a less hawkish Fed and they're happy with the UK economy, then we might see a break up and get back to sort of the 120, low 120 areas.